The next big tax battle on Capitol Hill could impact side hustles and payment apps. Robert Frank joins us now with more. Robert, what's going on here?
Well, Andrew, this affects a lot of people. The House and Ways Committee recently approved legislation that would roll back the so-called gig tax. That tax requires third-party payment apps like PayPal, Venmo, eBay, or Airbnb to send 1099-K forms to anyone that reports business income of more than $600 in a year. It was supposed to take effect in 2022. The IRS postponed that rule until the 2024 tax year, so that's this year if you're paying that. It cited confusion and lack of guidance, but Republicans are using that extra time to try to change it. Ways and Means passed a bill that would lift that $600 limit to $20,000 and saying a customer has to have over 200 transactions in a year. The GOP saying Americans shouldn't be harassed by the IRS for simply, say, selling a couch on eBay or paying a friend for concert tickets. Democrats say only business income, not reimbursement from friends or gifts from family members, would be subject to any income taxes. And, by the way, if you sell a couch or a car for less than you paid for it, that's also not taxed or reported since it's not a capital gain. The Tax Policy Center estimates that up to half of all income that right now flows through these third-party apps is going unreported. That has added to the tax gap, or the $500 billion a year that goes uncollected by the IRS. And there are proposals in the Senate also to lift this threshold to $10,000. Maybe they do a SALT deal where the Democrats get SALT relief, maybe up to $10,000 or $20,000. Right now it's $10,000 cap, maybe 20, in exchange for a $20,000 cap on the gig tax. So this could be a good negotiation that also rolls in SALT.
Okay, Robert, stay where you are because we're going to bring in a guest, but want you to be part of this. Steve Rosenthal is a senior fellow at the Urban Brookings Tax Policy Center. Also, Erica York, a senior economist at the Tax Foundation. Steve, you think this is a good idea? And what do you think the limit should be?
Well, I don't think backsliding on information returns is a good idea. Bad idea. Information returns are the foundation of our voluntary tax system. Our policy goal is to encourage a voluntary compliance and help the IRS determine whether taxpayers have properly reported. And we know, as Robert said, that information returns dramatically boost compliance. Without information returns, more than half of income is not reported. And let me just finish by saying information returns don't increase taxes. They only help determine taxes already owed.
Right.
And information returns can then help both taxpayers and the IRS properly determine the tax liability.
Erica, I think you're on the other side of this, and what I don't understand is, don't we care about accountability in this country? Don't we care about the rules and laws?
Yeah, so I agree with Steve. Going all the way back to $20,000 and 200 transactions isn't the right move. We know when that was the status quo, we had a problem of gig economy workers not understanding or having the information they need to meet their tax obligations. But just because the old status quo isn't the right answer, I don't think going all the way down to $600 is the right answer either when we look at the compliance and administrative burden that it could create by capturing or bringing in activity that shouldn't actually be on those information returns, that's not actually business income. And it shouldn't apply to those categories. But if you set up a payment app incorrectly, if you check the box that it's for a good or service when you're really just paying your friends and family, then you could find yourself getting a 1099 in the mail for something that isn't actually business income. Then that falls on you to contact that payment app, say you need to issue a correction to the IRS. That creates taxpayer confusion, that's time consuming, and that delays when people can ultimately file and see their tax returns processed. So I don't think $600 is the right answer.
Yeah, Steve, that's one of my questions. I mean, I'm all for everyone paying the taxes that they owe, but this is based on the premise that the payment apps are going to be accurate. And if you check the box for friends and family and you have, let's say, $20,000 or $30,000 at the end of the year because your roommate reimburses you for the rent on your Venmo or PayPal, and you check that box, and then they send a 1099-K that includes those payments as income, trying to get one of these companies on the phone to change it and go through transact, that's going to be impossible. It's never going to happen. So we're relying on the accuracy of these companies and on the IRS for what could be a major tax hit.
Well, Robert, I think the companies are pretty capable. And Eric and I agree on the value of information returns. They're really non-obtrusive in terms of a business filing them, virtually negligible in cost. And you raise a good question, Robert, on mistakes and the like. But look at what we do with W-2s and 1099s, MISCs, and NECs. We have a $600 threshold that's worked quite effectively for decades and decades. And so, yes, you raised some issues. One of the problems with some of the 1099K forms, for instance, they are gross receipts. And so that puts a burden on the taxpayer to come up with deductions. I think that the IRS has made a big mistake by delaying on guidance to make lives easier for both the reporting companies and the recipients. It's not that hard to do. The IRS could clarify that occasional sales are not subject to reporting, for instance, only commercial transactions, which is what Congress directed the IRS to do in the legislative history. And maybe if it's still a problem, maybe you raise the threshold for sales of goods, but not for services. But here's the issue. When you start having different reporting requirements, different from the uniform $600 for W-2s, part of the proposal you did not mention is to increase the reporting threshold for 1099 MISCs and NECs to 5,000, and then for 1099Ks to 20,000.
Right.
So similar transactions have different reporting requirements. That's confusion and a problem on its own.